The Auditor General of the Federation has flagged the Central Bank of Nigeria for reintroducing 29.77 billion naira worth of dirty, condemned banknotes in circulation in 2022, in a clear breach of its clean notes policy. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. The audit report on NDAs for 2022 shows that the Central Bank of Nigeria branches in Abuja, Lagos, Bauchi, and Jos issued notes already classified as counted audited dirty, currency formally processed and certified unfit for use. Abuja accounted for 28.6 billion naira of the recycled notes between October and December 2022. While Lagos released 970 million naira, Bauchi with 30 million naira, and Jos with 150 million naira at various dates. The report attributed the breach to weak internal control and warns that recirculating dirty notes undermines currency quality and Nigerian reputation. CBN branches offered varied explanations, from COVID-19 disruption, cash shortage, military demand, cash demand, and festive season pressure. But auditors dismissed all defenses as unsatisfactory. The Auditor General recommended the CBN governor be summoned by the National Assembly to justify the violations, with sanctions applied if explanation failed. The audit also uncovered delayed destruction of condemned notes, 99.7 million naira in 10 months, and 3.47 billion naira in 500 naira notes remain in the vault long after being classified unfit, raising risk of the privilege and weak currency management. These findings deepen scrutiny of the CBN's operations under the former Governor Godwin Emefiele, who is already facing multiple corruption and procurement charges. While the audit does not directly indict him, it holds the CBN management responsible for systematic breach in currency handling. Overall, the report paints a picture of poor control, questionable decision during the cash crunch era, and gap in the currency destruction process. British American Tobacco Nigeria has been honored by the Manufacturer Association of Nigeria for generating more than 300 million naira in exports earning between 2022 and 2024. The company received the Diamond Sponsor Appreciation Award as MAN 53rd AGM, which focused on boosting patronage of local-made goods. BAT's Nigerian exports span 13 West and Central African countries and United States, reinforcing its position as a key non-oil export contributors and a major source of forex inflow. Its Ibadan factory remains one of the West Africa's strongest manufacturing hub. The company supports an estimated 350,000 direct and indirect jobs across its supply chain. Highlighting its weight in employment and industrial development, MAN's leadership noted that BAT performance shows how multinationals can strengthen Nigeria's manufacturing base and advance the Made in Nigerian agenda as the country pushes for deeper industrialization under the AFCFTA. BAT's Nigeria recognition underscores the growing importance of non-oil exports in Nigeria's economic strategy. The company's scale, regional markets, reach, and job footprint shows how strong manufacturing operation can boost foreign exchange earning at a time when Nigeria faces persistent foreign exchange shortages. Nigerian State of Entrepreneurship Index has inched up to 0.47 in 2025 from 0.46 in 2024, signaling a mild improvement in the business environment, according to the Faith Institute latest nationwide. survey of 10,882 businesses. The report tracks trends across the state and the FCT, highlighting the performance of youth and female-led enterprises, job creation pattern, constraint opportunities, and policy needs. At the report's presentation, the Minister for Industry, Trade and Investment, John Enoch, stressed that the MSMEs remains the backbone preventing the economy from collapsing. He warns that Nigeria cannot achieve industrial growth without improving access to capital for entrepreneurs. Enoch argued that the MSME's resilience continues to drive progress, but government support must be stronger and more targeted to help businesses scale. He added that the MSMEs represent 96% of Nigerian businesses and hold the key to country's economic future, pushing for an environment where small firms can expand, innovate, and contribute meaningfully to industrialization. Faith Foundation Chairman Fola Adiola noted that the Institute has long advocated for a fair and simplified tax regime to ease pressure on SMEs. The slight rise in Nigeria's entrepreneurship index shows resilience but also highlights stagnation. The ecosystem is surviving, not accelerating. MSMEs continue to shoulder the economy, yet access to finance, high operating costs, and weak policy implementation remain major barriers. Without structural reform, Nigerian industrialization ambition may remain out of reach. The Dangote Group is set to center stage at the 2025 Kano International Trade Fair, rolling out major investments, new products, and SMEs-focused initiative as the event prepares to welcome more than 1,000 exhibitors from within and outside Nigeria. In a statement, the Group Chief Branding and Communication Officer, Anthony Chiejina, says the company's strong presence at the fair reflects its commitment to deepening commerce in Kano, one of Africa's oldest and most vibrant trading hubs. Chiejina noted that Kano continues to play a critical role in company's operation, including hosting one of its major rice milling plants. Additionally, mills under development in Jigawa, Zamfara, Niger, Kebbi, and Sokoto will bring Dangote's combined production capacity to 1.5 million tons annually. An intervention, he says, aligned with the national efforts to strengthen food security. He stated that Dangote subsidiary will operate dedicated help desk throughout the fair, offering visitors and entrepreneurs opportunities to explore partnership and business inquiries. The company will also unveil its new 100 kilogram and 25 kilogram sugar package on its special day at the fair. He added that the fair 2025 themed Empowering SMEs for Sustainable Growth aligns strongly with the group broader vision for sustainable national development. Also speaking, the senior advisor on project and strategic relation to the group president, Fatima Wali Abdurrahman, says Dangote's sponsorship aims to create real opportunities for micro, small, and medium enterprises to expand their market reach and strengthen Nigerian economic base. President of the Kano Chamber of Commerce, Industry, Mines and Agriculture, Ambassador Hassan Usman Dama, confirmed that the fair will host over 100 organizations and more than 1,000 exhibitors, boosted by major upgrade and expand facilities at the venue. He described Dangote as a longest and valued sponsor, noting that this year's collaboration will focus on SMEs development, backward integration, and industry skill transfer. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. 144.82 billion naira from its latest green and conventional bond issuance, surpassing subscription targets and reinforcing investors' confidence in the state's debt program. The fund will be channeled into major infrastructure projects under 1 trillion naira Lagos debt and hybrid instrument framework. Lagos State Babajide Sanwo-Olu described the issuance as another milestone in Lagos leadership of the domestic market bond. The state raised 14.815 billion naira through Nigeria's first subnational green bond, which drew 29.29 billion naira in total bids, while the Series 4 conventional bond targeted at 200 billion naira and closed at 230 billion naira. The Finance Commissioner Abayomi Oluyomi says project selection was aligned with UN Sustainable Development Goal to ensure measurable environmental and social impact. He added that the strong oversubscription signals continued market confidence and position Lagos for even larger future issuance. The successful fundraising underscores Lagos' strong credit appeal and deep investors' trust at a time when many subnationals struggle to access long-term capital. The state's entry into green financing also signals a shift towards sustainable infrastructure funding, potential setting a benchmark for other states. All right, before we call it a wrap, let's take a quick look at the stock market. All share index year-to-date return remains positive at 40.53%. Market capitalization has fallen from previous high above 99 trillion naira to approximately 92 trillion naira, resulting in over 7 trillion naira losses for investors this month. The banking index dipped by 1.22% at the midweek trading session. It recorded its worst performance since 2010, with a weekly decline of 7.27% in mid-November. Acting as a significant drag in the all-share index, the Nigerian banking industry faces several challenges. Sector asset growth is expected to be limited to 20% per year until the end of 2025, primarily to rising asset value and anticipated currency stabilization. Other concerns include a new windfall tax on foreign exchange profits, increasing regulatory costs, a required reserve policy of 50%, and a high inflation rate. The World Bank predicts that inflation will decline between 2025 and 2027. Consequently, banks will need to focus their lending on more profitable sectors such as technology and agriculture, as other sectors become saturated, thereby restricting credit expansion. Several interconnected factors have contributed to this bearish trend, particularly affecting major banks, which is deemed attracted to investors. There are high returns anticipated to be greater in the top banks, though it may be leveled due to stricter rules in regulatory scope concerning the banks. There are expectations to be leveled at an average of around 15 times for